thank you all so much for joining today. We are going to take you through post the merger with Millennial Precious Metals, what you can expect for Integra moving forward, key catalysts, timelines, and a lot of exciting news coming. Please note that this webinar will be recorded and posted to to the Integra website. The panelists joining me today, Jason Kosec, President and CEO, will be making forward-looking statements. Please refer to the corporate presentation and the website for necessary disclosure. The company has prepared a presentation for this webinar, which will be followed by a brief question and answer session. If you'd like to ask a question, please feel free to submit it using the Q&A feature in Zoom. We'll try to answer every question that's asked. If not, we can reach out directly and chat with you more about that question if we do not get to it. With that said, I'd like to hand the reins over to Jason Kosec, the new President and CEO and Director of Integra Resources, who will take you through today's presentation. Thank you.
Thanks a lot, Josh. Thanks for the intro. And thank you very much for everyone for joining today. Your time is much appreciated. Just in a summary, just as a refresher for everyone, what this merger did is really create the go-to vehicle in the basin for the precious metal space. By doing this, Integra has become the largest gold and silver resource endowment in the Great Basin that is not owned by a major mining company. And DeLamar is on track to be the next permitted gold and silver heap leach project within the basin, separating us significantly from our peer group. As Josh mentioned, I'll be making some forward-looking statements, so the disclaimer is posted on the company's website, and we encourage you all to take a look at that. Really what we have here is the leading go-to heap leach project in the Great Basin. As I mentioned earlier, there is significant resource endowment, about 4.2 million ounces of gold equivalent. And really, by combining these two projects, we create value throughout the Lassonde curve, and I'll show you that representation later on in the presentation. The management team has a significant track record from financing and M&A, project construction and exploration. I think one of the things that separates us as well is the strategic support from BD Capital and Wheaton Precious Metals. BD Capital is a very big supporter from development projects throughout Canada and the United States. Allows us to significantly de-risk the project financing portion of this company. Not only that, in the last financing that we did with the merger, was bringing in Wheaton Precious Metals. I think it was a very competitive bid process. There was a number of the biggest royalty and streamers willing to write checks. And what that really does is not only lowers the project and financing risk, but also gives significant project validation for both the DeLamar project and Wildcat and Mountain View. I think everyone is very familiar with the management team here, so I don't really need to go into it. I think the only two new members that some of you might not know is Eric Tremblay. Eric is a mining engineer. He was the general manager that built Canadian Malartic. He comes from the Osisko Group. He's also the COO of Dalradian. And Sarah Heston, who used to run the ASA Fund, which is now Merck, one of our largest shareholders, and she's a business professor at Stanford. Quickly, from a share structure perspective, right now we're sitting around a $90 million market cap US. I will note we will be doing a share consolidation, I believe, on May 22nd or 23rd. That'll bring us to roughly around 69 million shares out. Well, there is significant coverage from the sell side brokers. If anyone would like research, we're more than willing to pass it along. As I mentioned, having Wheaton and BD in there gives us significant project validation. Management here has been in the market buying significant chunks of stock. I believe we're well over $75,000 in the last week. And really, I think the biggest institutionals in this space that commonly you will not see on a share roster, sub $200 million market cap, gives us significant management and project validation. So right now you're looking at about a 30% retail float on it. On a project perspective, really what we see and what commonly plagues developers in this space is having a single asset company. And by having multiple horses in the race to a record of decision offsets the timing of when we're going to get those permits, okay? And that's how we significantly de-risk from a permitting perspective and a timeline perspective, and sets us apart from our peer group by having 3 projects in the exploration and development stage. Now, in the exploration stage, you got to remember the market is only giving, value to these 3 projects at 0.15 NAV, okay? All these projects are not ascribed into baked into the project validation, okay? There's a lot of added torque here. Significantly, a lot of value can be ascribed to Red Canyon. That's right in the heart of the Battle Mountain Eureka Trend, 35 kilometers south of the Cortez complex. Some of the most significant intercepts drilled globally in 2021, and I'm talking, 54 meters of 4.5 gram oxide from surface. There's a lot of exploration upside that the market isn't ascribing validation to, both on the DeLamar, on the non-oxide portion, War Eagle, and Black Sheep. So there's significant value that is not being baked into the market cap right now. The other thing that we notice in this space is this is the famous Lassonde curve. And what we see is, DeLamar is going into this permitting pipeline right now, where there's a lack of news flow. It's a permitting story, but is a very critical value creation perspective, okay? And typically, right here, you're getting in at 0.15 in permitted ounces. Right before they go into production, you get a value around 0.7 to 0.9. While DeLamar is in this permitting timeline for the next 2 to 3 years, Wildcat and Mountain View are just going to start this trajectory of this exploration euphoria phase. Remember, Wildcat and Mountain View have only been drilled on a 5-acre permit. And to put that in perspective, the total land package of those 2 projects is about 24,000 acres. This exploration program is going to get kicked off in the second half of this year. This will be about 2 years of really solid resource growth, so that when Wildcat and Mountain View go into the trough, into the permitting phase, DeLamar accelerates the value creation. So what we have done here is really backfilled the call it trough of the Lassonde curve. I always like to say, management teams really get paid to solve problems in this industry. And that's one of the 2 things that we just touched on is, one, not being a single asset company and being backed into a corner from a permitting perspective and running multiple horses at once, and offsetting this permitting stage in this value creation. Quickly, I like to really say that as much as we're in the business of adding ounces in a systematic and scientific manner, a lot of this business is about risk mitigation. And, DeLamar, for example, has done significant amount of engineering, permitting studies, baseline studies, 3 years of baseline work that has gone into to validate this project. The DeLamar project has done over 64 columns and over 456 bottle rolls. Because one of the big things, and to be frank, what can kill these things is the met, the resource conversion, the geotech, and a lot of those have been significantly removed. On the Wildcat side, there's been over 22 columns, over 186 bottle rolls, significant resource conversion. You're looking at about 80 to 90% resource conversion from inferred to indicated. DeLamar, I guess, as I just mentioned, 3 years of baseline studies. And the biggest catalyst that we'll have, one of the biggest catalysts that we'll have this year, is submitting the mine plan of operations in Q4. That is a major, major milestone for the company. Wildcat and Mountain View, as I mentioned, will continue along our baseline studies. and should have the exploration plan of operations that'll kick off that exploration cycle at those projects in the second half of this year. We should be filing our mine plan in 2024, in the second half of 2024. Okay, it's quite amazing the local community support that we have, especially in Jordan Valley and in Boise, and local communities in Lovelock. Our team with Integra has done an amazing job building those key relationships on the ground with the tribes and the local communities. Lastly, one of the biggest things that we can do from an exploration perspective is add ounces in a systematic way. The DeLamar asset, our cost per discoverable ounce is around $10. Industry average is around $30 to $50. Okay, so we drill ounces for 10. The average acquisition cost for ounces is at 100. This is how we create value as Integra. Okay. As I mentioned, there's significant resource growth on the Wildcat and Mountain View side that we'll touch on later on in the presentation, as we are just drilling under that 5-acre permit, and we've identified a number of targets that can significantly grow the resource going forward. Really, there's a significant scarcity for these projects. Okay. As I mentioned, these are the most recent acquisitions within the basin. Gold Standard Ventures going to Orla, Goldfields to Santana, Corvus to Anglo. And the average acquisition cost for these ounces is $100 an ounce. Currently, we are trading at $18 an ounce. So there's significant value creation that we're going to go through over the coming years. Okay. The DeLamar project, 2.6 million ounces of gold endowment, 127 million ounces of silver endowment, an operation that's doing about 35,000 ton per day, 136,000 ounces per annum, and significantly high margin at $840. Okay, over the last 4 years, we have increased our resource endowment by 76%. That's $10, as I mentioned, cost per discoverable ounce. Okay. Right now, we are just drilling through the stockpiles and backfill dumps. What we've seen is about 50 to 60 million tons of oxide material. This material has already been blasted. It would have already had to have been moved under the last PFS. This material just gets picked up and thrown on the leach pad. Grades are around 0.4 to 0.5. The drilling, we've been very lucky and we're very surprised on how positive these drill intercepts are. We're talking 76 meters of 0.7, 111 meters of 0.6. If these were in situ drill intercepts, these would be some of the best in the basin today. Okay. Right now, this is the oxide component of the PFS. Okay, so 8-year mine life, 814 AISC, doing about 136,000 ounces per annum at a $1,700 and a 5% discount rate. You're looking at 314. It should be noted that at spot, that's 485 million at a 5% discount rate and over a 45% IRR. As I mentioned, this oxide component does not include the stockpiles that we're drilling. Okay, this accounts for about 50 million tons. This accounts for 80 million tons. So you can see, when we update these numbers, how it'll really have a positive impact on the overall economics. As I mentioned, these are the dumps and these are the backfills. We're very lucky that Kinross left us a nice gift before we bought the project. This is over 20 years of stockpile, the low grade and the backfill material that didn't meet the mill cutoff. Okay, this will go into the updated resource that'll be coming out at the end of June, and will go into the updated economic study later on in 2024. Now moving on to Nevada, like I said, There's an updated resource and our preliminary economic assessment coming out at the end of June and early July. I'm not going to go into the details of these systems, but right now we're sitting at 776,000 ounces at 0.4. The key metric here, though, is the life of mine strip is 0.16. Okay. I'll show you a slide later on in the presentation where you look at the grade to strip ratio, so we compare apples to apples within the basin. And these Nevada projects are the highest strip adjusted grade projects in the Great Basin. Okay. On the upside potential, as I mentioned, these are only drilled on a 5-acre permit. So everywhere where we tried to step out to drill geotech holes, we're intersecting, 54 meters of 0.4, 30 meters of 0.35. From a disturbance perspective, like I said, you can't do a lot with 5 acres of disturbance. Okay, so for an example here, this hole cannot be included in the updated resource. For inferred, we need 100-meter spacing. So what that means is we'd have to put a hole right in the middle. And because we're confined to that 5-acre permit, we couldn't do that. We just wanted to start stepping out and understanding what is the true strike extent of this. Right now, the current pit is this little green red circle that I'm drawing right now. All these surface samples are not in the current resource. The current resource is about 1.5 by 1.5 kilometers. The updated footprint is 3 by 2.5 kilometers. Okay, so you can see how we can significantly grow it once we have the exploration plan of operations in the second half of this year. Moving on to Mountain View, as I mentioned, both Mountain View and Wildcat will have an updated resource and a combined PEA because they will be sharing the ADR plants. Right now, you're sitting at 427,000 ounces at 0.57. Strip's a little bit higher just because it's covered with these alluviums. But what we really see is, again, significant growth potential outside the pit. Our last hole was 100-meter step out, was almost 40 meters of 4 grams. We tried to extend this main breccia body right here. We actually snapped the rods as we were just getting into the breccia body, 17 meters of 0.6. But we know that mineralization continues another 100 meters outside. So again, there's significant growth potential right along the frontal range. We have surface samples where the actual rhyolite comes to surface. From an economics perspective, all this alluvium is unconsolidated sand and gravel. So from a mining perspective, you're looking at $1.50 a ton instead of $2 a ton. So really positive for the economics. Really, this is what sets us apart, okay? By the end of the year, we're going to be pushing over 7 million ounces, making us the largest gold and silver endowment that's not owned by a major mining company, okay? What we've done here, too, is to show you producing mines that are in the basin, their resource grade, their strip-adjusted grade, and then the average recoveries, okay? So you can see here, average recovery for the oxide component at DeLamar is 72%, okay? That's in line with everything else in the basin and, significantly higher than Round Mountain, and a strip-adjusted grade of 0.28. Kinross Bald Mountain's at 0.19. I believe Liberty over here, Black Pine is around the same thing. So these are very economic, high margin ounces, okay? For a Nevada project, strip adjusted grade of 0.56, average recoveries are going to be in the mid to low 70s, okay? So like I said, these are economic, high margin ounces in the best mining jurisdiction in the world. Really where we see this going over the next couple of years is putting us up in line with the Calibers and Marathon. This is a combined entity that is going to push over 234,000 ounces per annum. Okay, and that really puts us in line with really the Orlas of the world. Okay, like I said, this is really what Orla was in 2018. We're not reinventing the wheel. The Orla's management team has done an amazing job. Same with K92, same with Silvercrest, and really creating that next go-to vehicle that has the resource endowment and the scarcity that can push over that 200,000 ounce a year threshold, while keeping that high margin of around 850, 900 on an AISC basis. Okay. Really, what's to come? What are the major catalysts, and what's really going to drive the news flow this year? Is like I mentioned to you earlier, is the updated resource, including the stockpiles. Okay. As I mentioned, right now, the DeLamar Oxide component includes 81 million tons. Okay. The stockpiles are going to be about 50 to 60 million tons at 0.4, 0.5. And that material has already been blasted in mine. Okay. The major driver, de-risking portion, is that mine plan of operations. Like I mentioned earlier, DeLamar is the next permitted project in the Great Basin, separating us significantly from our peer group. Okay. Then you'll have the updated resource and joint PEA for the Nevada projects. There'll be significant resource growth potential both at DeLamar, Wildcat, and Mountain View. That program will get kicked off at Wildcat in probably August, September, once we get the finalized permit. And really, I think what people have to remember is that there's a lot of things that go on in the background from a permitting perspective to advance these projects. And a lot of these companies out there aren't really doing this because it costs a lot of money. But it's fundamental to deliver that permit is to do all the continued permitting studies and all the engineering studies towards that feasibility and towards that construction decision as quickly as we can. Okay. The biggest killer for junior companies is time and the time value of money. And we have been very aggressive on advancing these projects based on both from a resource perspective, but also from a permitting, social governance perspective, and an engineering perspective. Okay. So to put that all into a nutshell, like I said to you numerous times, this is the largest gold endowment in the Great Basin. There is a severe scarcity for these projects that can push over 200,000 ounces a year. Okay. There's a lot of synergies through the portfolio that we can continue to drive news flow and that excitement towards the market through the drill bit. The beauty is that we have the right team to do the job. As I mentioned to you earlier, as much as we are in this business to secure projects, we're also wanting to secure the top talent. And we truly believe that we have that within the Integra team. And really, the financial strength to do that right now will be sitting around $35 million. So we're fully financed to execute all of our plans that we have discussed. With that, I'm going to open it up with questions.
Thanks, Jay. And yeah, if people do have questions, feel free to use the Q&A feature through Zoom and we'll get to them. So one of the questions that came in here is really the focus for the company. Is it on oxide heap leach projects? What about, especially we know at DeLamar, there's a large sulfide component. Really, what is the focus and what should people expect?
Yeah, so all the upcoming studies that we're going to be putting out, both at DeLamar and on the Nevada assets, is we're keep it very, very simple. Open pit, heap leach, oxide only, focus on the high margin ounces to really extract maximum value for all the stake, keeping the CapEx low, keeping the OpEx low, sustaining capital low. Now, that being said, those sulfides at DeLamar, there is a lot of high-grade sulfides on the Wildcat and Mountain View projects as well. That's added resource endowment that is not baked into the evaluation right now. Those ounces are still economic, but that is, that's dealing with year 15 of the mining, and we're not going to be focusing on that for the time being.
Perfect. And what can people expect from an exploration perspective moving forward in terms of drill results? Where do you expect to target and things like that?
So yeah, I should have touched on that. Thanks for bringing that up, Josh. is, we still have over 9,000 meters to be released from the stockpile drilling. So that's about 247 holes. And really the biggest thing that we'll be doing from an exploration perspective is probably just over 2,300 meters this year, and a significantly larger program in 2024 at the Wildcat project. We really believe that, the near surface nature, there's a lot of low hanging fruit that we can significantally grow the resource. We know the footprint. We see the surface samples. We see all the old drill intercepts. Basically, it's just kind of bringing them into the inferred category, into the indicated category. So those will be the major drivers.
Great. There's been some interesting trading recently in the stock, some large blocks, it looks like. Is there anything you can comment on that about?
Yeah, thanks for bringing that up. So as you all know, Coeur was a shareholder of Integra. They have been exiting out of all of their equity positions. We were the last one for them to be exited out of. And why they're doing that is they were closing the quarter and they were running basically low on cash. Okay. So they exited out of everything. Okay. That was what the block trade was through Cormark. It was not an institutional trade. It was picked up by two big institutions. One in the United States, one up in Canada. They are long-only gold funds, so it went into very well hands. And to be quite frank, I think the whole street kind of looked at that core block as an overhang because they saw them exiting out of every other equity holding they had. So removing that kind of artificial overhang that we were working on placing that block kind of removes that and move onwards and upwards.
Awesome. So can you sort of outline the next year in terms of what we can expect from a news flow perspective and when you expect those things to be released?
So as I mentioned, the updated resource, including the stockpiles at DeLamar, will be at the end of June. The mine plan of operations will be at the end of this year, so sometime in Q4. You'll have the updated resource in the PEA at Cat Mountain View. Now it's a joint PEA. That'll be in end of June, early July. You'll have 9,000 meters of stockpile drilling to be released to the market, and then we'll kick off the exploration program at Wildcat in August, September of this year.
So there's going to be quite a bit of news flow. So I imagine there'll be quite a bit of marketing that goes along with that.
Exactly. Well, you know that very well, Josh. Josh and I are hitting the road next week for about a month, focusing on primarily U.S. retail, some high net worth people over in Europe, and seeing our existing shareholders. It should be noted too is that with this NYSE listing, we are blue sky compliant. And what that means is that retail brokers can recommend Integra to their clients. And there is very, very, very few exploration and development companies that have a full NYSE listing and are blue sky compliant. So when retail in the United States wants exposure to gold and silver, their shopping list becomes very small. And if you want to own the largest kind of go-to vehicle that has that scarcity factor in that endowment, it really funnels people in the United States straight to our story. And then obviously come September, October, right back into Beaver Creek and marketing season in the fall.
Great. Well, if there's no more questions, I think we can end the webinar. I just wanted to say thanks to everyone for joining. Obviously, if you need to reach out to us, there is a meeting tool on our website where you can book a meeting with management. It gives you an option of a 15 or a 30-minute meeting, really up to you. Or you can reach out at ir@integraresources.com. But really look forward to an exciting year for Integra and the new company and the new merger with a lot of things coming our way and coming out to the market, which we believe will have a positive impact. Do you have anything, any last question for you or last comment for you, Jason, before we jump?
No, I'm good. Thank you very much, everyone, for joining. And like Josh said, if anyone wants to go into to greater detail, this is basically a very high level overview of what's to come and where we really see this going. So feel free to book a meeting with us online. So thank you very much, everyone.